All right, my friends, how does the great state of New York tax retirees? If you're like me, your initial thought is probably can't be pretty good, but let's dive into the details and find out. Thanks again for coming to the Heritage Wealth Planning YouTube channel, the place you come to see how the great state of New York, how hard they are on retirees. And we're also talking about all the other states as well, plus everything else financial planning related. Improve your Social Security benefits, reduce your taxation, get your financial planning squared away. Make sure your estate documents are in order. Get your cash flow situated. You name it, we talk about here at Heritage Wealth Planning. So don't forget to subscribe. I think I'm pointing to the right place right there. Hit that little subscription button and then the bell to be notified of future content. We do try to do about 5 episodes a week or so. So stay tuned for more episodes. All right, so let's dive right into the great state of New York. Where I was in the Army in Watertown, New York, and I've been through New York 1,000 times going back from D.C., where I was going to high school, and my brother, sister, mom lived in Maine, so I've been through New York, been in the Army there, so I'm very familiar with the great state there, and let's see what we got. So New York, and it's light blue. All right, it better be light blue than dark blue, that's for sure. I'm a little bit wondering about these Kiplingers, though. It seems like last time they had New Mexico a lot worse than it actually looked to me, but let's see what they say. So they're saying at least it's not the least tax friendly. They're putting the second worst quintile. But they do say retirees catch several income tax breaks in the Empire State that help offset the state's property and sales tax. The state does not tax Social Security benefits or public pensions. There's also an exemption of up to $20,000 for private pensions and out-of-state government pensions as well. New York state law gives local governments and public school districts the option of granting a reduction in the amount of property taxes that qualifying seniors age 65 and older pay. Sales tax is 4% through the state, but localities can add as much as 4.88%. So the average combined rate is 8.5, which is definitely going to be pretty high. In the New York City metro area, there's an additional 3/8 of 1% sales tax support transit. Clothing and footwear that cost less than $100 per item are exempt from the sales tax. All right. Income tax low 4% is the low on 8,500 taxable income and 17,150 on married filing jointly, or 8,500 a single taxable income for single and 17,000 roughly for married filing jointly. And again, as we always do, so if we're using taxable income, we got to add our standard deductions. So we take 17,150, add 26,600, which means we'd have to have gross income of 43,750 for a married couple age 65 or above to hit the 4% low taxes. The high is on income for married filing jointly, 22.1 million. So if you're in that area, that's pretty high. Okay. And then New York allows localities to impose their own income tax, and the average is 2.1. So this is going to be not tax favorable from an income tax perspective. Effective income tax rate is 5.5% for individual and 6.2% for joint, but at least they do not tax Social Security. So that's a big win there if you plan correctly. Military, civil service, and New York state and local government pensions are also exempt. That's good. Up to $20,000 of qualified private pensions and annuity income for people 59 and a half are also exempt. Private pensions and annuity income. And that out-of-state government, okay. And IRAs qualify for retirement income exemption, as do 401ks and others. So that tells me that up to $20,000 of qualified private pension and annuity income, and I guess IRAs and 401ks and other defined contribution plans, as well as private pensions also qualify for $20,000. It does say per person, but I'm assuming it's per person, and you only have to be 59 and a half. So that's not too shabby. If you got all of your income from IRAs and Social Security, a bulk of that's going to be tax-free. That's good. All right. And again, they don't tax military, civil service, or New York state and local government pensions, and that includes federal pensions as well. Now, the big one is the property tax. So the median property tax on New York's median home value is $4,700 on the home value of $279,000. So that's going to be about 1.7 or something like that. Tax breaks for seniors. New York law gives local governments and public school districts the option of granting a reduction on the amount of property tax paid by reducing the assessed value of residential property owned by seniors by 50%. To qualify, the seniors must be 65 or older and meet certain income limitations. For the 50% exemption, the law allows each county, cities, town, whatever, to set the maximum income limit between $3,000 and $29,000. Okay, well, that's not much. Under the so-called sliding scale options, localities may also grant exemption of less than 50% to senior citizens with income between $29,000 and $38,000. So that doesn't seem like much. Enhanced STAR program. The STAR exemption is available for primary residents of senior citizens age 65 and older. Okay, with annual household income not exceeding the statewide standard, combined income must be $86,000 or less in 2017, and it will exempt the first $66,800 of the full value of their homes from school property tax. Well, that's probably pretty good there. So again, if your median house is 274, 279. And you fall into these categories for enhanced STAR, you could write off the first $66,800. Basically, you're going to be paying tax on $210,000 as an assessment, as opposed to $279,000 roughly. Just using these round numbers. You may qualify for an state income tax credit of $375 if at least one member of the household is 65 or older, and the household gross income is $18,000 or less, and you pay either property taxes or rent. At least one. Okay, so I'm not sure if you have to qualify for all three of those. If at least one member is household 65, household gross income is $18,000 or less, and you pay property tax. So I'm not sure how that. I'm not sure what that means. I don't know if it's all three have to be in there or just one. So if you're 65 or older, do you get $375 as a tax credit? I don't know. Sales tax is due on purchases. Some counties also charge a tax based on the weight of the vehicle. They do have an estate tax, a state estate tax, with estates exceeding $5.25 million, with a top tax rate of 16%. Starting in 2019, will be indexed to the federal exemption that's now in place, which is good because the federal exemption is much higher than that, and there is no inheritance tax. But the state estate tax is a cliff tax. That means that the value of the estate is more than 105% of the current exemption. The entire estate will be subject to state estate tax. So that's a big deal. So once you break that threshold, you're getting hammered on the first penny. So that's kind of like Massachusetts is too. But they didn't make it as clear in the Kiplingers for Massachusetts. I wish they would have. That could be problematic. All right. So let's look for a tax foundation. So it's interesting from an income tax perspective. New York is actually a lot more friendly than I would have thought if you have certain types of income. Social Security primarily, but also if you have $20,000 of IRA income per head. So that's $40,000, and you don't even have to be 65. It's got to be 59.5. Top individual tax rate is 8.82. The state and local tax burden is 12.7, which ranks at number one. That's not shocking. Tax Freedom Day is May 11th, which ranks as third from the last. The sales tax is pretty high. So even though the state sales tax is only 4, when you factor in the localities, is twice that. Actually, even more than twice that at 8.49, which puts in the top 10. So number one for income tax is number 10 for sales tax. Huge tax on smokes. Pretty big tax on gas, so they're getting hammered all across the board. Property tax is 1.4, which only puts it the 14th highest. But the fact that the cost of living in New York is so high in terms of real dollars paid is ranked number 4 in terms of real dollars paid to property taxes. So it's not favorable. No other way in New York. Smart asset, this will be more of the income side of things. We already see high sales tax, high property tax. We got $50,000 in Social Security income, $25,000 retirement income, and if that's the case, you pay nothing to the state. If you're married, filing jointly, and born in 1953, which puts you at 65 years old. So from an income tax perspective, it's good. I mean, there's no other way around that if you plan correctly and do your Social Security planning better than I think what a lot of people do. So let's flip these numbers around. Now we're going to have $50,000 retirement income and $25,000 Social Security, and here on $75,000, you're still only paying $550. So from just pure income perspective, the taxes in New York are actually quite favorable. No, I mean, it's better than most states I've seen because they give you pretty significant exclusions on various sources of income. Let's do 50-50. I imagine that won't change much yet. So really, you need to have a lot of Social Security income. You need to be taking a lot of IRA distributions out as well, and you'll be taxed very favorably in the state of New York. There's no other way around that. In fact, look at that. So here, $100,000 of gross income, of which $50,000 Social Security, $50,000 is IRAs. You're paying $6,600 to Uncle Sam, but only $550 to the state of New York. And so, like we said, New Mexico. If you get a chance, go look at my one I just did on New Mexico. You're paying twice to New Mexico what you're paying to the feds because Social Security in New Mexico is fully taxed. Now they have very, very low property taxes, but I mean, look at that. The feds are eating you alive in New York, where the state is not from an income tax perspective. If you plan correctly, moderately tax friendly towards retirees from an income tax. I agree with that 100%. Withdrawals from retirement accounts are partially taxed. Let's see. I wanted to go down. Moderately, we are top. Social Security is not taxable in New York, which is good. Here's their brackets here. I mean, so basically it's high. I mean, if you get taxable income, it's going to be a high bracket. But remember, taxable income is after your deduction. So Social Security, $20,000 exemption per head for IRA distributions. You're going to have, in that case, $40,000 plus your Social Security. You're not paying any tax on it. There's a property tax that's going to eat you alive. No other way around that. And the sales tax is pretty high, but they do give you a decent exemption. They don't call it a homestead exemption in New York, but they do get a pretty decent exemption for homesteaders, if you will, as long as you're a certain age and income restrictions. $30,000 from the home value. If you got a $300,000 house, that's 10%. You can deduct off the assessed value. Sales tax is killer. 8.5. The average city and county rates is pretty high, ninth highest in the state. So someone who spends $10,000 a year in taxable goods would be spending about $850 in sales tax. And then, of course, the estate tax as well. So I hope that helps, my friends. I mean, from an income tax perspective, is much better than I would have anticipated, actually. The property and sales tax, my two biggest bugaboos, though. I'd much rather have a high income tax and a low property and low sales tax in New York. They have a low income tax and higher on the other two ends, and that does concern me for sure. Property taxes are bare, no other way around that, especially for folks on fixed income. If this helps, don't forget to subscribe down below. As I said before, hit the bell for notification. Thumbs up are always helpful, my friends. Thumbs up. Give me a thumbs up if you like the content here. And then comments, too. I'd love to hear your comments, anything you're thinking about from your own perspective. I'd love to hear them. I don't live in New York. I don't live in any of these states other than the great state of Georgia. So if you're seeing things differently, let me know. And don't forget to go to the blog and podcast at heritagewealthplanning.com. See you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.